No doubt a man who's getting about 1 billion questions from all of your friends and clients and family members. I don't know, we haven't spoken in 3 years, but what do we do? What are you advising them to do right now? Just go out and buy Goldman Sachs and let it ride?
Yes, calls are coming in, Brian, but that's part of the gig. Yeah, I think there's a few things that you can do with the situation. I think obviously for breaking down different industries, looking at the banks, there is opportunity in the banks, right? You have to look at Goldman Sachs, for example. Obviously, they're trading well. They're trading at something I think is valuable and attractive at 7.5 times earnings at the price to earnings ratio. And if you look at how they performed, over the course of the year, it's relatively in line with the S&P. It's sometimes trading a little bit and performing a little bit better. Obviously, still down 20% from its November 2021 peak. But I think one of the big attractive areas for investors when you look at Goldman Sachs is the stronger push in consumer banking is relatively newer for them. And I think that may be undervalued. Obviously, with rates still going up and probably aggressive Fed continuing, this could be a hedge for investors. And I think that's opportunity for a lot of investors to look at.
Yeah. Also, we were just talking about market cap losses, Delano, and I was talking about how Microsoft has lost more in market cap than the market value of all but 7 companies. I mean, it's down $100 a share. Yeah. You like that, though. You want to buy low.
Yeah, Brian, we always had this honest conversation because, of course, as someone that's a growth investor and obviously someone that likes these mega cap tech areas, this is something that investors, should be in, as much as it makes sometimes their stomach queasy, looking at opportunities in this mega cap tech. You just mentioned the loss of market cap, but on the other side of things, their cloud business is still strong and growing. There's $65 billion in free cash flow, which has increased, incrementally since the beginning of the year. So operationally, they kind of were doing the right things to tighten up, their free cash flow and tighten up their earnings, so that, as they saw a little bit of forecasting what was going on from the beginning of the year. So strong balance sheet. They're still providing dividends to investors. You're going to have to ride out a couple more quarters of volatility. I don't think we're past it yet, but for people that have discretionary cash, this is an opportunity for them to look at Microsoft as well.
Yeah, and the other day we had a segment on the show with Steve Kovac, our tech reporter, about Roblox and how Roblox was starting to have ads, and I gave my opinion about what I think about ads in children's video games. But that aside, they're going to make a lot of money from it because that's where people literally live these days. Virtual reality, 100%. Real money.
Virtual reality, almost equating to real money. And I agree with you on the ads. Hopefully the algorithms are working so it's age appropriate all across the board. And Roblox is interesting because, this is a longer term bet, I think, for most investors because it's a growth story, obviously 100%. They were trading at $140, obviously a while ago, and they bottomed at 22 a share. But if you look at their most recent earnings, what they did is they still had strong user engagement. They have over 160 million active users. Consumers are spending less on the platform. That's probably going to continue for the next couple of quarters, but what they are doing is increasing engagement with, hours engaged, it rose 16% year over year. So they're at, a strong metric there. I think, with this, for investors, it's a stronger, longer term growth bet, but the trends are going to get better because they're at the worst parts of it right now.